Hawaii's housing market looked unstoppable for years. Prices climbing month after month. Inventory so tight that buyers were bidding against each other for anything remotely livable. And then, Governor Josh Green stepped in with promises to fix it all, to build more homes, to ease the pressure, to make the islands affordable again. But in 2025, something unexpected is happening. Inventory is climbing. Homes are sitting longer, and the governor is scrambling to explain why his solutions aren't working the way he promised. For buyers who thought relief was finally coming, the reality is turning out to be a lot more complicated. So what's really going on with Hawaii's housing market? And why is the governor suddenly on defense about a problem he claimed he'd already solved? 2 years ago, Hawaii's housing shortage wasn't just bad, it was historic. The state needed something like 50,000 new units just to catch up with demand, maybe more depending on who you asked. Families were cramming 3 generations into single-family homes because there was nowhere else to go. Young people were leaving for the mainland in droves, priced out before they even hit 30. And the waitlist for affordable housing stretched so long that some applicants died before their number came up. Governor Green, newly elected and eager to make his mark, rolled out an ambitious plan. He called it a crisis, which it was, and promised to fast-track construction, cut red tape, and deliver thousands of new homes. The rhetoric was bold. "We're going to build our way out of this," he said at press conferences and town halls across the islands, and for a while, it looked like he might actually pull it off. Permits started flowing faster. Developers who'd been stuck in bureaucratic limbo for years suddenly had approvals in hand. The state pushed through zoning changes, leaned on counties to speed up their processes, and dangled incentives to get builders moving. By mid-2024, the pipeline looked fuller than it had in decades. Cranes dotted the skyline in Honolulu. New subdivisions broke ground in Kapolei and Ewa Beach. Even the neighbor islands saw a pickup in activity. For the first time in years, it felt like Hawaii might actually be building enough homes to make a dent in the shortage. But then, the numbers started coming in. And they didn't match the optimism. Inventory in Hawaii has been climbing since early 2025, and not in the way anyone expected. In January, active listings across the state ticked up by about 8% compared to the year before. By March, that number had grown to 12%. And by summer, inventory was up nearly 20% year over year in some markets. Oahu saw the biggest jump, with listings in Honolulu proper climbing even faster. The Big Island and Maui weren't far behind. For buyers who'd spent years fighting over scraps, it should have been good news. More options, less competition. A chance to actually think about a purchase instead of throwing cash at the first thing that came up. But the relief didn't quite land because prices weren't falling, at least not by much. The median home price on Oahu hovered around $1.1 million through the first half of 2025, down maybe 3% from the peak, but still far out of reach for most local families. On Maui, the median sat closer to $1.2 million. On the Big Island, where you'd think affordability might be easier to find, it was still pushing $800,000 for a single-family home. So inventory was rising, but affordability wasn't improving. And that created a weird dynamic. Sellers who'd been sitting on properties, waiting for the perfect moment to cash out, suddenly found themselves in a market where buyers had options. Listings that would have sold in days a year earlier were now sitting for weeks, sometimes months. Days on market started creeping up. In Honolulu, the average home sat for about 25 days in early 2024. By mid-2025, that number had stretched past 40 days. In some neighborhoods, it was closer to 60. Sellers weren't panicking yet, but they weren't getting the instant gratification they'd grown used to either. Governor Green's response to the shifting market has been, well, defensive. At a housing summit in June 2025, he doubled down on his building agenda, insisting that the state was on track to deliver the homes it promised. He pointed to permit numbers, to new projects in the pipeline, to partnerships with developers. But when pressed on why inventory was rising without prices falling, his answers got a little fuzzier. He talked about supply chain issues, about labor shortages, about the need for patience. He said the market was adjusting, which is true, but didn't really explain why that adjustment wasn't translating into relief for buyers. Behind the scenes, people close to the administration were starting to worry. The governor had staked his reputation on solving the housing crisis, and the early wins had bought him political capital. But now the narrative was shifting. Inventory was up, sure, but so were days on market. And if prices stayed high while homes sat unsold, the whole plan started to look less like a solution and more like a gamble that hadn't quite paid off. Local real estate agents were noticing the change too. One agent in Kailua described it as a standoff. Sellers still wanted top dollar, convinced that Hawaii's market would always be a seller's market because, well, it's Hawaii. But buyers were getting pickier, more cautious, less willing to overpay just to get in. The urgency that had defined the market for years was fading, replaced by a kind of wait-and-see mentality on both sides. And that's not a dynamic that favors quick sales or falling prices. The thing about Hawaii's housing market is that it's never been normal. Even before the pandemic, even before the latest surge, it was always expensive, always tight, always a little bit insane. The islands have limited land. Building costs are through the roof because everything has to be shipped in. Labor is expensive. Permitting takes forever. And demand? Well, demand never really goes away because people want to live here. So when inventory starts climbing and prices stay high, it's not entirely surprising. It's just frustrating. For buyers hoping that more supply would finally bring some relief, the current market feels like a bait and switch. Yes, to choose from. Yes, you. There are more home, are not getting into bidding wars as often. But the sticker price is still absurd. And the sense that affordability is just around the corner keeps slipping further away. Governor Green's challenge now is figuring out how to keep his housing agenda moving forward without admitting that the early optimism was maybe a little premature. He needs to show progress, but the progress that matters, lower prices, more attainable homes, isn't showing up in the data. At least not yet. And in the meantime, the market is doing its own thing, settling into a strange middle ground where sellers aren't desperate and buyers aren't desperate, but nobody's entirely happy either. Part of the problem is that the new construction hitting the market isn't necessarily the kind of housing that solves the affordability crisis. A lot of the new units are condos, and a lot of those condos are aimed at higher income buyers or investors. Luxury towers in Kakako, upscale developments in Kapolei, vacation rentals on the neighbor islands. These projects add to the inventory count, sure, but they don't do much for the family making $80,000 a year trying to find a 3-bedroom house within an hour of their job. The state's affordable housing mandates require developers to include a certain percentage of below-market units in new projects, but those units are often snatched up through lotteries with odds that make winning feel like pure luck. And even when you win, the so-called affordable price is still a stretch for many local families. So the inventory is growing, but the gap between what's available and what people can actually afford isn't closing. And that's where Governor Green's messaging starts to break down. Because he can point to all the permits and all the cranes and all the new units coming online. But if those units aren't helping the people who need help the most, the victory starts to feel hollow. What happens next in Hawaii's housing market is anybody's guess. If inventory keeps climbing and buyers keep holding back, prices might eventually start to soften. Maybe not a crash, but a slow drift downward that makes things slightly more manageable. Or sellers could dig in, refusing to drop prices and waiting for demand to pick back up. In which case, the standoff continues and the market just kind of sits there, frozen. Governor Green, meanwhile, has to keep pushing his agenda forward while managing expectations that might have gotten a little out of hand. He's betting that time will prove him right, that the housing pipeline he's built will eventually deliver the relief Hawaii needs. But time is also the thing he's running out of, because voters and families and young people looking at their futures, they're not going to wait forever for a solution that keeps getting pushed down the road. The next chapter of this story is still being written, and the data coming in over the next few months will tell us whether Hawaii's housing shift is the beginning of real change, or just another frustrating detour in a crisis that never seems to end. The governor can keep pointing to permits and construction numbers, but those numbers don't tell you much the problem for the people who actually, if the units being built, aren't solving need housing. And that's kind of where the whole thing starts to fall apart, or at least where the messaging gets tricky. Because a lot of what's being built in Hawaii right now, especially on Oahu, is stuff aimed at people with money. Luxury condos in Kakako, high-end developments in areas that use the neighbor islands that sit empty half the year. These tend to be more affordable. Vacation rental properties on projects show up in the inventory count. Sure, they add units to the total, but they're not doing anything for the family trying reasonable distance of where they work. That to scrape together enough to afford a place within state has affordable housing mandates. Yeah. Developers have to include a certain percentage of below units get snatched up fast, usually market units in new projects. But those through lotteries where your odds of winning are about as good as any other lottery. And even when you do win, the so-called affordable price is still a stretch for a lot of local families. So inventory is growing technically, but the gap between what's available and what people can actually afford, that gap isn't really closing. Maybe it's even getting wider in some ways, and that's where Governor Green's whole narrative starts to feel a little shaky. He can talk about all the construction happening, all the permits being issued, all the new units coming online. But if those units aren't helping the people who need help the most, what's the point? The victory starts to feel pretty hollow when you look at it that way. No. What happens next in Hawaii's housing market is hard to predict. Could be that inventory keeps climbing and buyers keep holding back, waiting for prices to soften a bit. Maybe not a crash. Nobody's really expecting that. But a slow drift downward that makes things slightly more manageable. Or maybe sellers just dig in, refuse to drop prices, and wait for demand to pick back up. In which case, the standoff continues and the market just kind of sits there, frozen. Neither side willing to budge. That's a real possibility too. Governor Green has to keep pushing his agenda forward while managing expectations that might have gotten out of hand. He's betting that time will prove him right, that the housing pipeline he's built will eventually deliver the relief Hawaii needs. But time is also the thing he's running out of. Because voters and families and young people looking at their futures, they're not going to wait forever for a solution that keeps getting pushed down the road. They're going to make decisions based on what they see right now. And right now, what they see is a market that's still out of reach for most of them. The ripple effects of Hawaii's housing situation places too, not just in the market, are starting to show up in other itself, but in how people are thinking about their lives here. You talk to teachers, nurses, service workers, people who keep the state running, and a lot of them are questioning whether they can stay long-term. Some are already making plans to leave, not because they want to, but because the math just doesn't work anymore. And when you lose those people, the people who actually make communities function, you lose something that's hard to get back. The state can towers it build all the luxuries nobody left wants, but if they're to staff the hospitals or in the schools, or keep the restaurants open, what kind of place are you left with? That's the question a lot of people are starting to ask. And it's not a question the good answer for. Yet, their governor's office has also the issue of what happens if the broader economy takes a hit, if job losses start piling up, or if another financial shock hits the system. Hawaii's economy is fragile in ways that other states aren't. It's heavily dependent on tourism, heavily dependent on outside money flowing in. If that flow slows down, things can unravel pretty quickly here. And if sellers who are currently holding firm suddenly find themselves in a situation where they have to sell, where they can't afford to wait anymore, the market could shift fast. You'd see a flood of inventory hitting all at once. Prices would drop, probably sharply in some areas, and then you'd have a whole different set of problems to deal with. Underwater mortgages, foreclosures, all the stuff that happened during the housing crash. Governor D, after the last green, has to be thinking about that scenario, even if he's not talking about it publicly. Because if it happens, all the optimism and all the construction permits in the world won't matter much coming in over. The data the next few months is going to be market keep climbing and inventory keeps stacking up, that critical. If days on's going to put pressure on sellers eventually, some of them will crack. Some of them will decide that waiting isn't worth it, and they'll start cutting prices to move their properties. And once that starts happening, it can snowball pretty quickly. Other sellers see prices dropping, and they panic. They drop their prices too. And suddenly, you've got a real downward trend going. But if inventory starts to level off, if days on market stabilize, then maybe the standoff continues. Maybe prices just hover where they are for a while, not going up much, but not crashing either. That's probably the best case scenario from the governor's perspective. Not ideal, but manageable. It buys him time to keep working on the longer-term solutions without having to deal with a full-blown crisis. But here's the thing. Even if the market stabilizes, even if prices don't crash, the underlying problem is still there. Housing in Hawaii is still too expensive for most people who live here, and that's not going to change unless something fundamental shifts. Either incomes have to go up significantly, or housing costs have to come down significantly. And neither of those things seems likely to happen anytime soon. So you're left with this situation where the market might settle into a new normal, but that new normal is still a crisis for a huge chunk of the population. That's the reality Governor Green is dealing with, and it's a reality that doesn't have easy answers or quick fixes. The next chapter of this story is still being written. The data will keep coming in. The market will keep adjusting. Governor Green will keep making his case that progress is happening, that the housing pipeline he's built will eventually pay off, and families and buyers and sellers will keep making their own decisions based on what they see and what they can afford. Whether Hawaii's housing shift turns out to be the beginning of real change or just another frustrating detour in a crisis that never seems to end, that's still an open question. But one thing is clear, the pressure isn't going away, and the people waiting for relief are running out of patience. For now, the best anyone can do is watch the numbers and hope that something gives. Maybe it's sellers finally accepting that the market has changed. Maybe it's buyers finding a way to make the math work despite everything. Maybe it's the governor's pipeline actually delivering units that people can afford, not just units that pad the statistics. But hoping isn't a strategy, and waiting isn't a solution. The clock is ticking for everyone involved. Sellers watching their listings sit. Buyers watching prices that won't budge. Governor Green watching his promises bump up against a reality that's proving harder to reshape than he probably expected. In August 2025, Hawaii's median home price sat at $1.1 million on Oahu, down only about 3% from peak levels, despite inventory climbing nearly 20% year over year. Days on market stretched past 40 days in Honolulu, double what it was a year earlier. These numbers, tracked by local MLS data and state housing reports, show a market in transition, but not necessarily in the direction anyone hoped for. What remains unclear is whether this shift represents a temporary adjustment or the start of something bigger. Governor Green's ambitious housing agenda has delivered permits and construction activity, but the gap between what's being built and what people can actually afford hasn't closed. Whether his bet on time and patience pays off or becomes another chapter in Hawaii's long-running affordability crisis, that answer is still months, maybe years away. What's certain right now is that the power in Hawaii's housing market has shifted, not because demand collapsed or prices cratered, but because the standoff between what sellers want and what buyers can pay has reached a kind of stalemate that nobody quite knows how to break.